Guys, the engineer here. On this video I will be explaining you how to draw the new weeks opening gaps, new month opening gaps, new day opening gaps, and the logic behind my algorithm to follow these gaps. This is like the foundation. I think personally is not that ICT talk, but I think that the PDRA metrics, the premium discount levels, are based on this. If you keep consistent and annotating your chart like I will do it, you will see, you will have many aha moments in your trading. This is like the summary for me from almost 3 years now studying ICT. And this is the easiest way because I studied almost every video available from him, and you will find that every PDRA that is printed in your chart is based on this logic. Okay, so this is just a short introduction because this is really important for me to do it. And I think that this will be a gem in your trading if you learn to do it properly. Okay, so basically the first thing I do, I use this tool from the Toodegrees family, the power of 3. I think that this is one of the best tools available for trading. You can customize almost every aspect of the power of 3 of candle. So, and this is specific, I consider the monthly time frame, and I want the opening of every monthly candle because it's easier for me to move to the monthly open instead of having to look for it manually and like do it draw a vertical line. And it's easier for me to display the monthly chart and the levels. Okay, so here we have the settlement, to the ability with this toggle to use the settlement as close on the daily interval. So you will find that the candles are different between this, like for example this, the closing price here is different from here. Okay, even the candles, what I'm saying, we had here a negative or a bearish candle, and the colors different, the closing price is different, and this is important. On my back testing, I found that the algorithm running this is considering both of these time intervals. Okay, so what I do first is, without the settlement price toggle, I move on to the first monthly candle. You can do this basically for every month, and I'm using the actual contract. I'm not using the continuous chart anymore. I used to do that on that chart because it's easier and you can look back and you can see this price action better, but I find out that it's better to use the actual contract for this specific annotating in your chart. So first step, identify the monthly open, and you are going to annotate the closing price and the opening of the next month. Okay, I use the rectangle option with the extend right toggle on here. So this is better to extend to the for future price action, and I want to see the 50% of that range. Okay, so I have here my new month opening gap layouts and templates. Automatically you can use it here from standard deviations, new month opening gaps, new week opening gap, new day opening gap. Okay, So we identify the closing price of the previous month, and we are going to look for the new month opening here, and we are going to annotate the closing to the opening of that month. Okay, so this is the new month opening gap between May and June. But what I do is basically I will look for the settlement, and I will try to see if there is a difference between both charts. Okay, so in this case, for example, we have that with the settlement toggle on, the closing price is different between this closing price and this and the other chart. You see, it's different. So I used to have both levels, both gaps, but I find out that it's better to have only one level. It's cleaner, and basically what I want is to use the rectangle or the range that is um, outside of the completely both the comparison between both of the new month opening gaps. I don't know if I am explaining well, but yes. So this is a closing opening because this is outside of this. I prefer to have this one only, the one that is outside. Okay, so this is for this specific month. Now I'm going to move to the next month, and we have here the new month opening gap between June and July. I will do the same thing, closing, opening, and I will look for the comparison. So yes, now we can see that the closing price of this candle is outside of the settlement option here, the range. So what I will consider is I will move this to this candle. So now in this range, I'm considering all the levels inside of both charts. And I have now a very accurate new month opening gap, considering the settlement and the regular electronic chart. So I will do this for every month. Now let's move on to the next one. You can see that in this month the closing price and the opening is almost the same on this chart, so there is no gap at all. But if you consider the settlement, we have this big gap here, and I want this, and I will adjust the new month opening gap like this. I will use this one because it's bigger than the other one. Okay, I hope you understand this the way I'm doing it. I think it's really simple, but it's important to do it like this. You will see why. Okay, so now we move on to the next month, that is between September and between August and September, and we have here a gap here. Change the chart, and for example on this one, this closing price it's below, so I will move on like this, and see how we are considering also this level in the future. And if we use only like it was before, it's fine, but I prefer to have the complete gap from both charts. Okay, nice. Let's move on to the next month. Compare here. The closing price of this is here, and I will adjust. Next month, fine. So now I have all my new month opening gaps in my chart. Okay, so what I do next is I will plot the quadrants between the one and another new month opening gap. Okay, so ICT says that basically we are moving from the 50% or event horizon from one gap to the next one. But when you have the quadrants, also the 25% and 75%, it's easier to follow price, and you will see. So I use the fifth tool for this specific condition, and I have the event horizon here, 75%, event horizon, and 25%. So what I will do is I will use in the levels that are close in proximity to the previous new month opening gap. Okay, so I will use these specific ranges between this new month opening gap and this is the next level. But this is something important. Every month these levels are going to be dynamic, are going to change. When the new month open, we are going to change every month the quadrants and the event horizon between the actual new month opening gap in close proximity to the previous one. So imagine that this candle was formed, the new month opens here, so I will immediately move my fifth to this specific level. But when the next month is open, now is not, I will not use this range. I will move it like this, and I will use another one from here to here. Now, and I have fractalized the range between the opening of the previous monthly range and the next one in close proximity. So now I have a fractalized range between these two new months, two previous 3 months, this one, the previous one, and this one. So these levels are dynamic, are not static at all, because what frames the premium or discount or the PDR rate matrix basically is the opening of a candle. If you are premium of discount relative to that specific candle open, but it's not a random candle, it's the monthly candle. Okay, so this will be a really important price level for future reference for the market. So every month you have to adjust these ranges. So this is how I do it. Instead of extending to the right, I will use from this month will be this, or between this month and this month, these are my levels. For this month and this month, I will use here and here. Okay. So I will not draw the levels below here, only this, because we are too far from here, but you can do it if you want it. Now, because between this new month opening gap and this new month opening gap is actually really small, the difference between this gap and this one, I will not use fifth here. But between this one and this one, yes. So I will use this from here. You can see that the levels are almost the same, but not the same. So between this monthly range and this one. Okay, so between this new month opening gap and this one, these levels between this and this one, Okay, beautiful. So now I have my matrix of premium and discount levels in my chart. Okay, so every significant move is going to be formed inside of these monthly levels. Okay, but what do we do above the marketplace if we don't have above new month opening gaps? Well, in order of hierarchy, we are going to use new weeks opening gaps. Okay, so now what I will do is I will change the power of 3 to the weekly chart configuration instead of the, but I will hide the power of 3 here. I want only to see the openings. I really not using the candles, but I can hide here the power of 3, and this line is a new week. So we're going to consider this, and the same. I wanted to notice something. This is one. This is another one, closing and opening. If and no, sorry, this is not a new week opening up. It's actually this one. Okay, so now we have the Solomon chart toggle on. If we change it, we see that if we consider the only this one, these levels, we didn't tap at all and at this specific level. You see, and actually this new week opening up is almost insignificant, and we didn't reach it at all. See, so we failed to reach this new week opening up here and actually here. So if you use the Solomon and you move on and you adjust your gaps, you will see that we actually tap here into this level. This is important, and the same for here. Well, we are going to adjust like this. Okay, so now you are going to see that we reach perfectly the 50% when on this week. We tap into the 50%, expand aggressively to here. So this is a new week opening up, but since we don't have new week opening up above the marketplace, we are going to use now, in order of hierarchy, a new day opening gap. So this is your reaction block, but what actually is a new day opening gap on the daily chart, and we are going to use it the same here, but we are going to compare. If you see the settlement, it's almost the same level, but if you use the settlement toggle on, it's not the same. So I want this. Okay, so now I have my PDRA matrix premium relative to the monthly levels, since I don't have new months. So red levels, new month opening gaps, green levels, new week opening gaps, and blue levels are my new day opening gaps. And I will do the same in close proximity on a new week opening gap, new month. I'm going to use this one. For all this range, this is my premium and discount. You don't need to identify a dealing range from high to lows and look for fair value gaps and look for inversions and look for breakers, at least in higher time frame, for framing your bias. This is a big deal, believe me. For example, I was expecting lower prices if we fail to close above the 50% of the event horizon between this range. I was expecting from here in the live stream, I was saying that after taking the short-term low here, and we tap perfectly into the event horizon here. You can see we didn't close below it, and we were consolidating between these two new month opening gap. And once we leave this, I wanted to see if we did respect here, but we didn't. We failed, and now what I'm looking is if the 50% of the event horizon between these new gaps, these two gaps, I'm expecting to reach this level, the upper portion of the quadrant, and the gap. And from here, the same. Once we are leaving the gaps, we are expanding aggressively. This is the foundation of the low resistance liquidity runs. Basically, these moves are going to present when the range between two significant gaps in higher time frames are far away from each other. So like on this range. So you will see that between this new month opening gap and this range is actually huge. So the moves between one another are going to be smooth and clean. You see, when we are trading inside of or between a small range between these two new gaps, price is struggling to leave that range because they are using these levels to accumulate and accumulate positions. So price is struggling to leave that range. But once you leave the range like here, once we close above it, look how we move beautiful to the next gap. So study this logic, and this is the way I use it, and the way I draw these levels in my chart. Okay, so now the next week is about to begin. It's about to start. So now, since this is a new day opening gap and the new week is about to start, I will consider now. I will not consider this relevant anymore because a new week opening gap is about to form. From here, I don't know, imagine from here, imagine that this is a new week opening gap, and from the level in cross proximity here, I will use this one. Okay, so now these are my levels for trading, and I will look for liquidity near or close below above the marketplace. So imagine that this is the closing price, and I don't know, we got something like this, and you have the event horizon, the 75%, 25. Okay. So I hope you find this insightful. This is really simple and powerful, and this is how you want your trading to be. Something that is really simple. This is like I don't know if ICT will explain this in the future, but he's pointing into this with all the knowledge that he's releasing. He's not going to talk never about this in a very direct way because he wants the people to do the work and study and study and study and study. But the majority of the people are not going to I don't know how to say it, but you are not going to find this only by yourself if you don't spend a lot of hours studying price and you have a very organized approach for your trading. And there is nothing like this. This is amazing. Okay, so every week you are framing your opening respect to the previous one. And this is the same for the new day. The market is a matrix of time-based gaps. and we are moving from discount and premium relative to the previous gap, about 50% over the variance horizon, if you want to call it like that. But for example, on regular trading hours, I do the exact same thing, but for this, I use the 7 hours chart, and I move on to the regular trading hours, and I will do exactly the same thing that I did on this specific example, but I will use the regular trading hours, and I will have two templates, one for regular trading hours and one for electronic trading hours, considering both Salomon and regular chart. So I have my layouts, and I have what I look on every chart, and I will explain in coming videos about how do I organize my trading and the protocol that I follow every day. I talked about a little bit of this on the previous live stream, about the question that I ask myself every day before engaging the market. But the foundation of my trading is based on framing my trades relative to this specific logic here. Okay. So this is a perfect approach to have annotated key levels in your chart. Really key levels, not random order blocks, not random volume imbalance, or annotating every, if imagine that you have a chart like this. Oh, I have a BC here, and I have another BC here, and I have an inversion PD array, and now I have to annotate this breaker, and now, so you can have an infinite number of PD arrays in your chart, an infinite number of them, believe me, because I did it. I was trying to find like an easy approach to mark every premium or discount PD array. But once you understand that you are basically trading in a matrix of gaps, and the market is referencing the price of these specific time levels, your trading is gonna change, but huge. Believe it or not. In the future, you are going to see every chart like this, because this is like it's not because I do it like this, but it's the best way to annotate your charts, the best way, and I want to everybody use this now. But so I hope this helps you to understand the way I annotate this, and I will not you do it for the regular trading hours, because it's basically the same and you have to do it by yourself. But this is the way, okay, to understanding premium or discount based on these gaps, because price is drawing to them. So do this as a homework and study them. Backtest these levels once you finish to annotate this chart. Go to your trading, so the previous dates, and you will be amazed to find out what price is doing, referencing to these specific price points. I took a short here to this, I long here to this, I took a long from this to the all-time highs here. So yes, this is everything, guys. Forgive me if I can explain myself really well, because it's not my main language. I try to do my best to explain it, but sometimes it's I don't know. Okay, so study.